Making money in the stock market is easy if you know what to do. There are some times where we should be following the trend, where we should be buying what others are buying as that particular asset, whether it be a stock or crypto, continues to go higher. And there are other times where we should be a contrarian, where we should be selling what others are buying and buying what others are selling. And the reason for this has to do with market cycles and a little bit about the difference in the psychology between an institutional trader and a retail trader. You see, the market, as well as individual stocks and even crypto, go through four general market cycles. On the left hand side of this chart, where the stock is rising higher, this disbelief, hope, belief, euphoria, that whole stage, that is called markup. And that is where the stock is rising. At the top of the chart, where you got this euphoria in green, as well as a little bit in the anxiety stage, this is known as the distribution stage. This is where stocks top out and they start to go back down. And then this whole downward is the markdown stage. This is where everybody's pretty much selling. And then at the bottom, everything from capitulation over to depression, that is your accumulation stage. And this is where the institutional investors are buying, but retail investors have gotten out of the market. And if you think about the overall market like this, you can think of, say, 2020 into early 2021 was kind of the left-hand portion of this chart where there was the markup stage and everybody was buying. And then we hit just peak euphoria in about a March of 2021. And that is when all those retail stocks started to go down. And by 2022, we were in full on panic mode. Everybody was selling everything. And then by October of 2022, you hit capitulation, the market bottoms out. And a lot of retail investors at that point had gotten out of the market. They were angry, they were depressed, they were saying the stock market is rigged. They were saying it's impossible to make money in the stock market, and everybody was just angry. They were gotten out. And then the stock market started going back up in October of 2022. There was disbelief. Oh, it's just a relief rally. We're going to continue going down. It's a bull trap, a lot of disbelief. So what happens during each of these market cycles is during that accumulation stage between capitulation and depression, the retail traders have all gotten out. They've quit, they've given up, they're out of the market. And this is where the value investors, the institutional investors, these are coming in saying, stocks are really low priced right now. I'm going to start buying. And so they start buying. And then at some point, the market breaks out and it starts to go up. This is that disbelief stage where we kind of move from accumulation into the markup. And this is where the institutional and the value investors are saying, whoop, stocks are breaking out. They're about to skyrocket. I need to put all the rest of my money into the market now before we continue higher. And that sends us up on the left-hand side of this chart, sends us up into the hope stage. And that is where retail starts to come back in. They're like, oh, wow, stocks are going back up. Let me get in. Maybe I'll get lucky and make a little bit of money. And then we start to get up to that belief stage. And then people are really jumping in and people are saying, wow, we're making money. I could be a millionaire again. Let's jump in. Let's do it. Let's buy. And this is where you start getting more and more and more. And then you get to the euphoria stage. And this is where people are like, oh my gosh, the stock's going to go to the moon. The fundamentals don't matter. The stock has a PE of 60 or 80 or whatever. Who cares? It doesn't matter. Stocks are going to go up forever. The fundamentals don't matter. The technicals don't matter. The trend is your friend. Buy. But what ends up happening is, even though you get massive volume and a lot of buyers in the euphoria stage, the stocks just do not go up in price. And then what ends up happening is, the reason is because at this stage, the value investors, the institutional investors, they start to realize that stocks are overpriced. They start selling. So you still have a lot of retail buying, but then you have an equal amount of institutional selling. And so even though you have a lot of volume, stocks just aren't going up. And then the sellers actually start to overpower the buyers. And then you start to get the anxiety. This is where people that bought during the euphoria stage start to worry that, oh my gosh, stock's going down. Am I going to start to lose? At this point, though, everybody who bought during the markup, everybody who bought during the hope and belief cycles, they've sold, they've gotten out. And then you start getting denial. And this is where people are saying, oh, no, it's going to go back up. I'm just going to hold. I'm going to hold. I know I'm losing money, but I'm just going to hold. It's going to go back up. I have hope. It's going to go back up. And they're in denial about the fact the stock price is coming down until eventually you get to the panic stage. And this is where people have started to give up. They're selling now. There's no buyers. Everybody's selling. Capitulation is where everybody just throws in the towel. They said, this stock is done. It's horrible. Nobody should buy it. Everybody's out. And that's when the institutional investors and the value investors start jumping back in. So if we think about the market cycle and how the market works, you can actually start to realize where we are at right now, what stocks or what industries are sort of hitting that distribution phase where they're starting to come down, and what stocks or industries or crypto even are in the accumulation stage where we've been flat for a while and we're starting to break out to the upside. If you think about it, what ran up massively, what hit mass euphoria, and what is now starting to come down? Well, in my mind, the number one industry is technology, especially when we're dealing with AI. And so if you're smart and you think about this, you realize how the market cycles work, you start to realize, okay, technology, AI, a lot of the mega cap tech stocks, we're in the distribution stage. There's still a lot of hope, but they're starting to get some anxiety. Investors are starting to get a little bit anxious. Like, okay, what if we're not going up? People are talking about head and shoulders. People are talking about these stocks being overpriced. I'm starting to get a little worried here. This is kind of the stage we're at right now, this anxiety stage. We're just starting to go down. And September is historically the worst month of the year for the stock market. September could be the month that pushes those technology stocks. It eliminates all of the anxiety and causes people to shift from anxious to panic. It's possible, but we still have to get through, before we get there, this hope stage, the disbelief stage, where people say, it's not going to keep going down. We're going to bottom out. We're going to go back up. We just have to hold on. Don't give up. Don't sell. And we got to get through that stage, and then we'll get to the panic stage and we'll really sell off. And then sometime in October, we should be in full-on panic and capitulation, which will be a great time to rebuy and buy really, really cheap. But right now is selling time. It's time to take profit. It's time to get out. And then come October, hopefully, we'll hit that capitulation part. Hopefully, come October, that'll be the time to start buying again. But September, historically being the worst month of the year for the stock market, we're probably going to be looking at quite a bit of panic come September. So technology stocks, AI stocks, I'm selling right now, getting rid of, not something I want to be in. But there are other categories of assets that are in the accumulation stage. And one of those is crypto. Now, even though September is also historically the worst month of the year for crypto, I wouldn't want to be loading up on crypto yet. We are starting to see it break out. So we're kind of in that disbelief stage on crypto. We've seen it bottom out. We've seen it trade flat. We've seen it start to go back up and then pull back down a little bit. We're getting very, very close to the markup stage on crypto. We're getting very close to the point where crypto breaks out and just goes on a massive rally. So September, again, historically the worst month of the year for crypto. But because we have been in accumulation for quite a while now in crypto, I do think we are getting ready for a breakout on cryptocurrencies. I do think we are getting ready for crypto to go into the markup cycle and really start to rally, quite possibly to new all-time highs come later in 2023 and well into 2024 and possibly 2025. So for that reason, I am looking to start buying cryptocurrencies starting in September and especially going a little bit heavier in October. But right now I'm just selling, getting into some cash and getting ready to rebuy different crypto and stocks come October. So with that said, keep that in mind because I want to show you what's coming up for earnings. Now, even though earnings season is over, we do have a few interesting stocks reporting earnings Wednesday after the close, Thursday after the close. And quite frankly, all of these stocks are currently in the markdown stage where they're selling off. Those include C3 AI Wednesday after the close, GameStop, ChargePoint, and then Thursday after the close, we got Planet, RH. All of these stocks ran up massively during the hype cycle in 2021, and now they've all sold off. Now, even though a lot of people lost money in the stock market due to stocks like these, and possibly even these stocks themselves, I know you didn't. You're way smarter than that, but a lot of people did. So I want to show you how to look at these stocks and value these stocks and realize when they're about to have their major sell-offs that they all inevitably go through once the hype and euphoria goes away. So take C3 AI, for example, that's reporting Wednesday after the close. If you look at the chart on C3 AI, it has pretty much just been down ever since it released with its IPO. Now, they're right after the IPO. I mean, it ran up initially. It immediately had a double top. And the distribution stage where stocks top out are almost always marked by either a double top or a head and shoulders. And this stock had a classic double top, and then it fell, and it has done nothing but fall for many, many years. Now, this year, literally just starting this year, it has started to go back up. It's actually up like 180% year to date. But when you compare it to where it was at when it first IPO'd back in 2021, this has really just gone down. And 180% year to date is amazing. It's certainly been in markup, but how long does the markup last? When does this top out? When is it over? For that, we've really got to look at fundamentals. Now, if you look at the earnings, they're negative. You look at the PE ratio or the EPS earnings per share, it's all negative because the company doesn't have any earnings. So when we're dealing with a company with no earnings, we have to value it by the sales, the revenue. So for that, we use the PS, price to sales. Now, this currently has a price to sales of 12.85. Now, with a PS of 12.85, we would expect the company to be growing sales by 1,285% per year. That's essentially what the stock is pricing in. It's an increase of sales of 1,285%. In other words, it would have to 12x its sales. Now, that seems kind of ridiculous, but we have seen some growth stocks do that. So let's go ahead and take a look at C3AI's sales and revenue to see how it's been doing. And if we look at C3AI's sales and revenue increase, 4 quarters ago, it increased 24% year over year. Very nice. Then 3 quarters ago, it increased 7% year over year. Well, that's a big slowdown. And then 2 quarters ago, it decreased 4%. Well, that's not good. And then last quarter, it only increased by 0%. Well, that's not good either. So revenue has only really been growing by about 5-6% per year. And based upon that, you would expect to see the PS ratio, the price to sales ratio, show an increase of 6% per year, which would put the PS ratio at 1.06. But the PS ratio on the stock is not 1.06, it's 12.85. What does that mean? Well, it means the stock's about 12 times overpriced. Okay, so the company isn't profitable. The other thing we got to look at is how much cash do they have on hand, because sometimes companies can be valued based upon the amount of cash that they have on hand. And certainly, C3AI has a lot of cash on hand. In fact, they're talking $730 million worth of cash. What I also really like about C3AI is the fact that their total current assets are $888 million, but their total current liabilities are only $136 million. So this company has enough cash on hand to survive for years into the future. So I really wouldn't be worried about C3AI going out of business anytime soon. They're certainly going to stick around. Now, there is a big difference between a great company and a great stock. Before we can even compare that, though, let's go look at the company and see if they're even a great company or not. Now, I'm not going to do a deep dive into C3 AI. There's plenty of other influencers who have done that. But generally, what you need to know is that C3 AI is an enterprise AI company, meaning they sell their AI to large corporations and governments. And they've got a lot of great AI tools. They help the supply chain industry with their inventory optimization, their supply networks, their schedule optimization. They help sustainability in both energy and ESG. They help sales reps with customer relationship management. They help financial services with lending, cash management, anti-money laundering. They help government, defense sector with readiness and intelligence, and they help local and state governments with property appraisals and law enforcement. So C3 AI is a great company. They've got a lot of great tools. They can certainly become profitable at some point in the future. But does that mean it's a great stock? Now, without even knowing how to do fundamental analysis, we can use Seeking Alpha to see what the stock is currently doing. And over on the right, we've got the ratings summary. Now, as you can see, the Seeking Alpha analysts as well as Wall Street rate this a hold. If you know anything about the analyst ratings, you know that holds are basically sells. And the other thing that's interesting is that the quant rating is a buy. Now, quant does not look at fundamentals. It only looks at technicals. So the quant is looking at the fact that the stock is running up. It's currently in the markup stage. It's going up. It's trading up. And that makes the stock a buy. So from a technical standpoint, C3 AI is a buy. From a fundamental standpoint, C3 AI is a sell. Now, if you go down to the factor grades, you're going to see how the valuation is a C, meaning the stock is overvalued. It's overpriced. But growth is an A+. Certainly the company is growing. Profitability, obviously a D. They're not profitable. Momentum is a technical. That's obviously an A because the stock is moving upward. Now, what we can do is we can click on the valuation tab. Again, without knowing anything about fundamental analysis, we can just click on valuation, see how the fundamentals are doing, and the valuation is currently a C. Based upon the sales, obviously it's rated a D-. Based upon future sales, again, a D-. Price to sales is a D-. Future price to sales, a D-. The book value is a C, meaning the cash on hand is helping to improve the valuation a little bit. And the forward-looking book value is also C+. Again, the cash value is helping to improve the fundamentals of the company a little bit. But overall, it is definitely, no doubt about it, an overvalued company, an overvalued stock. Now, when it comes to growth, it's overall rated an A+, but we just don't have a lot of metrics. So if we look at the individual metrics, there's really only two that we can look at. One is the revenue growth over the previous, and it's a C. It's only gone up 5.5% over the past year. Not great revenue growth. It is expected to grow revenues by 13% in the future, which is good, but still does not compare to the 12-time multiple that we're currently having. So in general, if you go back to the life cycle of a stock, you can see how C3 AI is currently in a little bit of a markup. But based upon the fact that it is extremely overvalued, this would put us near or approaching the euphoria stage. And if you remember from this chart, the euphoria stage is the distribution stage where the stock tends to top out and start going back down. So based upon the life cycle of the stock, it is still kind of in markup, but we're approaching distribution. So if you had bought C3 AI, this would be the point where you would want to sell and take profits. And if you are somebody that likes to look for shorting opportunities, this would be the time to start getting in and start shorting the stock, but not quite yet. Maybe wait a little bit, maybe after earnings. So C3 AI is one of those stocks that's starting to top out. We don't know where the top is. We don't know where the top is actually going to be. We don't know if this is the top and it's going to start going back down, or if it's going to go up another 50% and then start going back down. But what we do know is that C3 AI is near the top. So this is how you can use your knowledge of market cycles to determine when a stock is near the top and about to go back down, like C3 AI is. And you can also use that same knowledge of market cycles to know when something is in the accumulation stage and it's about to break out and go up, like Bitcoin and crypto is. So you can use this to determine what to buy and what to sell. And just to throw one more example out there for you, there's a lot of fear that there's going to be a worker strike against GM, Ford, and Stellantis, and this is causing those stocks to fall as well. Now, if you look at the chart on those stocks, you're going to realize that they've already down and they're starting to sell off more rapidly. So these stocks are probably very close to capitulation. They probably got a little bit more to fall. They'll probably fall in September. But then come October, they're probably going to enter the accumulation stage. So stocks like Ford and GM are going to be good stocks to buy in October as well. So this is some examples of what you might want to buy, what you might want to sell. If you want to learn more about market cycles and how different industries and segments of the economy move and what goes up and what goes down during different market cycles, you want to learn how to do fundamental analysis, how to find these stocks, how to make money in the stock market, and just fill in all those blanks that you're currently missing. Go check out the course in the description of this video. That course is going to help you make money in the stock market, and it's going to teach you all the things that you've been missing out on that you need to know in order to actually become profitable and become financially free and retire early and do all those things that you've ever wanted to do by investing in the stock market. Now, if you got a lot out of this video, please be a good friend, share this video with your friends and family, hit the like button, subscribe, and if you missed the video I uploaded last time where I talked about trading psychology and why 75% of investors lose money and how you can be part of the 25% who makes money, make sure you watch the last video that I uploaded here.